this is more of an interactive session, so it will be very meaningful for you to take the best out of it. And I really have two eminent people here who can really give a lot of insight into early stage funding. Today we have two eminent personalities with us. Let me call Nats itself first and to introduce you. He's the founder and MD and CFO of Helium Ventures, which is a $600 million fund in India. Made about 60 investments, which is, to me, it's significant, to be very frank. I know I've been associated with some of the investment, how much time we took in taking a decision on the receiving side of it. And it makes sense when I talk about his pedigree in terms of the company which he has invested. The Make My Trip, Redbus, then Amba Research, and United Legs. And you know, at least Make My Trip and Redbus, most of you should be knowing, and the success which they have created. And to my left, Mr. K.C. Chandy, who is the partner of E&Y. I don't think I need to introduce E&Y to you, but the significant part is that he advises people like Nats on investment. In other words, we've got an influencer on my left-hand side, and I've got a person who actually gives you money on my right-hand side. And I was a receiver of an investment in my early stage of my life. So we have all the three elements here, and this is an opportunity for us to take the maximum out of this context. Welcome.
Thank you, Andy.
Thank you, Andy.
Now, let me start this session with Nats first. You know, I've been in this journey, so it's almost 25 years. I mean, it's very, sometimes when you talk about 25, that talks about how old you are sometimes. But I know the difficulty I went through in terms of investment and making someone to put money on your belief. So can you give me some insight into the early stage investment, what you as an investor look for, and how people sitting here would be valuable to them?
This early stage investing is mostly on a trust and belief. Not that later stage investing is not. So we primarily look at two things. One is the entrepreneur and the team, and the second is the market size. Market size is very important. We should know that how big is the market and what is the penetration there and what is addressable market there. That is one part. How long you can go, how much we can go. And the second one, which is more important than even the market, is the entrepreneur and the team he has. To give you an anecdote that even if the market size, there is something wrong happens in the market or the market size, if the entrepreneur and the team are good, we believe that he can just retrieve the lost time and money, and then he can take the company to a different path. So we give a lot more weightage to the entrepreneurs and the team. We just invest behind them. So that is in one word, if I can say that, team and team, team and team.
Thank you. That's a very interesting perspective. By the way, before I go further, how many of you are entrepreneurs here? Can you just raise? Oh, brilliant.
Wow.
This is amazing. Good.
Wow.
So if you have any questions, please, if you want to write it down, that will be very useful. For the benefit of the conversation, I can ask on your behalf. Please write down and give it to somebody. If someone can collect it, that will be really useful.
Chandy, and we would like more questions, okay? We would like this to be an interactive session.
So do you want to add anything further to this?
Just to add on to what Nats has said, the philosophy of the investor is, and you heard Nats's fund size, 600 million, 60 investments. They don't really have the time to monitor you. So when they get in to invest, they want to ensure that the ethical framework is perfect. And what we are seeing as a firm is some of the investors, Helion and others, in cases are asking us to undertake forensic reviews of the investors. They're saying, we'll worry about the business, but can you just give me a dipstick on the individual quality, what he's done, what his precedents are. So just again to summarize, the market segment is very important. The flavor of the year, a couple of years is very important, but most important is the entrepreneurial or the entrepreneur and his background.
That's interesting. I mean, I had a forensic, but never come across with forensic of in the entrepreneur. So that is an interesting dimension which you're bringing in. So it goes back to your point of the people aspect, right? Do you really want to get evidences of? Is that something which you?
Yeah, which is true. See, I sit in the board of Symbiosis University in Pune, and I was addressing SCIT batch of the students. And one of the students asked this question, saying that why are most of the companies hiring only from IIMs? Why not from tier 2, tier 3 MBA colleges? I just told them that the answer is very simple. When you are hired, the interviewer in half an hour or 1 hour interview, he will not be able to assess you. So he just trusts the IIMs. So he trusts that if you have passed IIM, then you are more or less cleared in terms of academics. So that is the same thing, a parallel, if I had to draw with what NK asked, that if Chandy gives a forensic report, gives a background check report about an entrepreneur, it gives us a comfort, because in 1, 2, 3 months of dating, I will not be able to find out, right? So, and I need to be with you guys for next 7 years. Hopefully 7 years I get an exit.
So I think then we should start first preparing an entrepreneurial horoscope first. Right?
Yeah, absolutely, yeah.
So that would be the future of entrepreneurs. I mean, maybe we should start. So we can.
On that note, start the conversation. But as NK is saying, it's very, very crucial. Today social media is abuzz with a lot of things. Right. Be sensitive, especially when people are younger. We do a lot of indiscreet things which find their way to investors.
But that is interesting. I mean, you guys need to be careful now, right? Whatever you say on this Facebook and social media, that becomes your horoscope and digital horoscope. And I work in the enterprise software space. And we help large corporates in terms of understanding the customer and then basically charging the customer based on the value. So one of the key points which we bring out is that how do you find out the value of the customer to the organization? So if you really look at the tomorrow's world, at least we will not be there, to be frank. Tomorrow's world is going to be completely naked world, digitally naked. So the fact that everything which you do now with the wearable devices, even they can read your mind. You can read your every property of your being.
Instantly, today I read in Economic Times. I don't know whether anybody read today. Shortly, if you are logging into a Dell laptop, it will tell you your mood. It seems whether you are in a good mood or not in a good mood. In Economic Times, it has come up.
In fact, thank you. Somebody brought in some interesting question. Do you value an investor's background only or only on their passion? So, you might have got this answer saying that it is not only passion, your background also matters. So keep that in mind. And of course, people can change, and if those factors is also considered, I hope. Chandi, is that true?
Absolutely. All of this is, the fundamental is the person knows what he's doing, and only then will you clear the first test and come to the second. Right. So domain expertise is critical.
I just want to add one thing. Let's see, I don't know who wrote this question. So when you asked this question, whether you bother about the background and not the passion, who wrote this question?
Right.
Okay. So, sir, what do you mean by background? Do you have that in mind, that if you have financially sound, then only we will invest, or no? Is that the question?
No, it's very simple, right? That if you suggest that someone has to be a successful entrepreneur to receive money, right, then I don't think that's a fair assessment, because the issue is, if they're creating innovation, they may never have been an entrepreneur in their whole lives. And instead, what I'm alluding to is that, like some of the talks which were given, they will find ways to make it work. Necessity becomes the mother of invention. And so what I was saying is, it's an oversimplification that you do a forensic audit, and no offense to anyone, that you do a forensic audit to see if this person has the capital required. Instead, I think what's more important is what they bring to the table.
No,
in
no,
terms
no,
of
no, no.
passion.
So-
Yeah, you need to answer. Yeah.
So, any of these forensic audit, I think unfortunately we got it down that path. So, that is not meant for any of your financial health or financial capability or anything like that. So, don't even bother about that. I think this is mainly to say whether there are any cases pending, whether there are background checks done. So, it is for that. So, I just want to make that clear. We have invested in so many startups we have invested, and we have invested in companies who, the guys who have just passed out from IITs, who have just started, 23-year-old guys, okay, who have an idea and who thinks that they can execute. And when in our assessment, he has put some 5, 6, 7 people team to execute it. So it is not only passion, and not only idea, but also execution capability. I think that is more important, because all of us can give many ideas, but how will we execute is a big question. So that is what I think we will like to find out.
Okay. So in other words, maybe I can help summarizing. There are two factors which investors look for. One is the person, and then the idea and the associated market. That is the whole essence of it. The person means the value of the individual. There's nothing about how educated the person is, how, maybe that help in certain factors, but it is the context of that person in that enterprise or in that cause. So that is the point, nothing other than that. Do you agree with that?
Completely. And, to answer your first point, I think Nats spoke on it briefly. All the early stage, if you take the investors, and a large number of them are concentrated in Bangalore, they've all invested in, first generation entrepreneurs. So there's no entrepreneurial background that they're looking at. So if that answers your question.
Good. Let me just, a lot of questions coming by. I'll just try to consolidate that in the meantime. But then let me get to the next point. I mean, now naturally, when you go for investment, you look for the business plan and the market size. What do you really look for in a business plan? Or do you really, how much value you give to that? I mean, you can, maybe Chandi, you can start with.
So I think that's it's an interesting question, and a question which entrepreneurs can come back and say, what did you see in mind that you invested, or what did you not see in mind that you have not invested? But really, when they start off, we must understand that these investors, when they start talking to you, they have studied the market, they have studied the segment, they have studied competition, they have studied trends. Wow. So what they are looking to see in your business plan is does it make sense? Does this person know, what he's putting together, the costs that are involved, the market, the sizing of the market? So it's really a business plan, and again, the early stage investor is not looking for a very detailed business plan because these are disruptive technologies that you're investing in. It's just an articulation of how you want to make your venture, successful, and whether you've considered all factors is what they look for. And Nats can give a much better answer to that.
So honestly, I don't believe any business plan. Okay, so because you guys are so early, if you are an early entrepreneur, you can put any damn business plan, and I will discount it by 100%.
100%?
Yes, and that is what is the reality going to happen. You yourself, you guys have, so many people are entrepreneurs here. Just tell me honestly, touching your heart, what business plan you would put 3 years back have you achieved? How much you have achieved?
Anybody
want to take a crack? 20%, 30%, how much you have achieved? Honestly. Okay, and it will not jeopardize any of your future pitch to Helion, don't worry.
Right.
So I think like Chandi said, what we really look at is what is the market size, how much is going to be penetration, how you will be able to execute. Okay, and a few things we look at really is your compatibility with us. For example, some of the qualities like very ability to mix with people, ability to delegate authority, ability to spend consciously. There are many people I have seen that who will be going in an auto rickshaw. The moment the investor money come, they will go by flights.
Right.
So these are all the cultural issues. I think some of the cultural issues we really want to test it out. And we will test it out in that 3 months. Okay, first month we will give a term sheet, next 2 months is diligence and docs. In that 3 months, and I have walked out of a transaction just after signing the SHA before funding. because we found that there was a ridiculous behavior of an entrepreneur on that day.
Brilliant. Okay.
So I can give that example later.
So in other words, what you 100% discount
Yes.
business
So-
plan, but that you said another point, which is you said you look for the market, right?
Yes.
So is it your assessment or is it the entrepreneur's assessment?
So it is first we take from the entrepreneur assessment. Then we also do a diligence about, based on our assessment, this is what it is. And we have a constructive conversation with the entrepreneur, saying that you are saying that it is a $500 million market, whereas we think that it's only $100 million. Where is the gap? So we have a conversation on that. We understand that where is the bridge. Most of the time we may be wrong. So never think that we are right. Okay, so that is another thing. So don't think that whatever we say is right also.
You know, at least the takeaway from that is at least the entrepreneur should know their
Yes,
market, right?
exactly.
The business plan should
Exactly.
at least have a element which talks about the market
Exactly.
science and how they're going to, at least their belief in how that is going to be addressed.
Exactly.
Right?
And
So-
how you will execute. So that is what we want to know from your business plan, what you are presenting.
So then another question is, at what point do you raise capital? So this is talking about the early stage. There are multiple questions here. Let me combine all that. What do you mean by early stage, and what stage you raise capital? Can you-
So guys, I think you raise capital at all stages. Okay, you raise capital when you have an idea. Okay, you raise capital when you validated that idea and then move to a revenue model. You raise capital when you started your revenue. Okay, and let us just restrict only to these three stages, because beyond that it is a Series A and Series B kind of a stuff. So for a moment, let us just leave that. Now, let's take the first one, which is you raise capital when you have an idea. It is extremely difficult for anybody to give you money when you just have an idea. Only three people will give you money: friends, family, and fools.
Fools.
3 Fs, we say. Right? So this is an
So
idea stage.
you come in the fools category?
No, that's why I said that very rarely people will invest in, so we don't give in ideas. So, not that we are not fools, but at least I'm not on this count.
Right.
So
Thank you.
after that, when the idea is validated and then move to a revenue model, you would not have even cracked a revenue. You are moving to a revenue model. At the time we are there. Okay, and then if you already started with the revenue, and then we are there. So these are all the two stages we are there. We are there in seed, we are there in Series A. We are not necessarily there in an angel. So that is the difference. These are all the three stages of, and my strong recommendation is you should start raising money only after you validate the idea very well. And then you establish a very clear revenue model. Then only you should go to an investor.
You want to add?
No, if I want, the only point, if it's only clarificatory, that when Nats is mentioning revenue model, it's not profit, it's revenue. Is there a source to get top line, not necessarily bottom line when the idea is validated?
Right. There is another fundamental question which has come in. Do you really search for companies, or you expect companies to come and pitch to you?
So both, guys. I think both. So we have in-house analysts. We have 3 analysts, sector-wise earmarked, and they research and then they reach out to the companies. And the companies also approach us. Investment bankers bring the deals from you guys. You guys can approach us directly. So there are all of it are open.
But Nats, anecdotally what I've heard, and you know it better, is that VCs talk about, and in the last year, them getting at least 10 business plans or 10 ideas or 10 opportunities to review. So the inflow into a VC's office is very significant. There are very significant number of ideas being floated.
So to give you a perspective, in the last 8 years, we have seen 7,000 business plans.
Wow.
Okay, and we have invested in 62 companies. Okay, so now you can
Imagine the kind of filtering.
what kind of filtrations will happen.
Okay, interesting. And there is specifically questions about manufacturing companies. Do you invest in manufacturing companies? Is there
So we don't invest in manufacturing companies. We invest only in technology-enabled companies. We are looking at more capital-efficient companies. we don't invest in manufacturing.
That is you as a fund because
as a fund,
fund.
it's a fund.
But definitely, Chandi, I would like to.
So here, while Nats is talking of Helion, there are a lot of funds out there. So every fund, again to give you a background on where Nats is coming from, every fund raises money from an investment, investors based on their theme. And the theme of Helion is IT, consumer. And similarly, there are multiple funds out there whose theme is manufacturing, whose theme is, various other themes, electronics, manufacturing, and you name it, real estate, all sorts. So therefore, there are investors out there for each and every idea that makes sense, that can find traction in the market. So, do not be constrained in your thoughts on whether we will get whether there's such an investor out there. There are investors out there.
Excuse
Next
me.
comes very an interesting.
I will just,
Yeah.
sorry, I just wanted to clarify to Nat's reply to my question on manufacturing. You said that you will only invest in technology-enabled capital efficiency companies. You mean manufacturing companies are not capital efficient?
No, madam, I think it is, I don't want to disrespect you. There is nothing to disrespect you. Our fund philosophy is not to invest in manufacturing companies.
Let me help you on that front. Every fund takes a theme of investment. There are companies, the fund which only invest in manufacturing. There are companies only invest in what we call pure technology. There are companies only invest in life sciences. There are companies only invest in education. So it is the theme under which that fund is working on. He was talking only about his fund, their fund. So there is absolutely no dearth of funding for any kind of business or any kind of entrepreneurship. So there will always be this thing. Is that the point which you've been trying to raise? Okay.
I'm still intrigued of the fact that so much of investment, so much of bhav is given to capital-light e-commerce industries.
Yeah.
And if you go to neighboring China, so much of product development, manufacturing emphasis is given. Why is the government, investment companies, VCs, PEs are all going into capital-light model? I understand if it's my money also I will look for the same returns. But are there any specific manufacturing-based investment companies that are available here in India? I have not seen yet.
No, the funds available in India.
Yeah, funds
Chandi,
for
are you able to-
manufacturing companies.
So if you, we have seen quite a few of the funds, but not in later stage companies. So a lot of early stage funds are more in technology that is more, can be more readily appreciated. Because manufacturing takes a little more time to get going, we are seeing that funds come into manufacturing once it is hurdled the first, revenue and is showing some signs of profit. And that is a challenge, as you're rightly saying, but that is the philosophy. Because investors need to come in, they are managing somebody else's investment. So then they are trying to make the most use or the best use of that.
But do you agree with the fact that there are less funds available for manufacturing?
The less funds is at the early stage. Once
Right.
you've hurdled that, you show a sliver of profit, there'll be a lot of money chasing you.
Right. In fact, that is the problem. It's always the chicken and egg problem. And you have what you call that valley of death. Getting over that valley is very critical for manufacturing because the stakes are much higher. Maybe that's also an area which is also financed by the traditional financing sector like banking. So you need to understand that's a sector which is heavily supported by that stream of institutions. And keep that point also in mind.
For example, banks will never lend money to technology
companies.
Because
It's
there
just
is
the
no-
opposite.
There is no assets there.
Right, so that's the difference. And also associated with what is the equity dial. No, this is a very important aspect. How do you value the startups? Who wonders?
Aha, this is a very $1 million question. I don't know. So
Chandi, you
guys,
want?
the valuation is an art. Okay, so valuation is a big time art. Gone are the days. 8 years back when we started, at the time I think venture equity system was at a very, very nascent stage. And I still remember the entrepreneurs used to do a top-down approach. For example, they'll say, in 5 years we will make 500 crores. Okay, it will start like this. 5 years, at the end of 5 years, I'll make 50 crore profit. and if I list in the stock exchange, it will earn 10 times of the profit. So market cap will be 500 crore. And if you are giving, if I am giving 25%, if you are owning, so you will get, let's take 20%. So 100 crores you will get. So if you have to get a 25% return, backward calculate, so I need to get 10 crore for 20 crore for say 20%. So this kind of a calculation people will do. And I still remember that lot of people used to do this calculation and they used to ask the valuation. Okay, these are all at least 4 years back. Okay, last 4 years nobody asked. I think a lot of people have learned. Now, how do we value is, first of all, we don't know whether that 50 crore profit is going to happen. First of all, we don't know whether the profit is going to happen. Second, we don't know whether 50 crore is going to happen. Third, we don't know whether the 10 times of profit is going to happen. Okay, so there are so many moving parts. So how we value this is, we take that if this is going to be the market which is going to be addressed, and if they are able to address so much market, and if they can scale to this company, then how much more money will be required to reach that stage? That is very important. So money required till we exit is one of the important factor which we consider. Then if money is required, at various stages it will be required. It is not that entire money you will take now. So we presume that today they will take 2 million, at the end of 1 year they will take another 5 million, at the end of 3 years they will take another 20 million, then they will exit. They will exit at say 200 million. So then we work back and then say that, see how it is. So these are all only a back-ended Excel sheet calculation. Okay, like I told you, valuation is an art. It is also forced by the competition. Okay, so suppose if NK is raising funding for his company, and if I have quoted say $50 million valuation, if I know Chandy is quoting 60 million, then I will immediately adjust. I will make it to 62 million and try to close.
Okay.
So
Right.
Actually, that's the most, we are seeing quite a bit.
Can you hear?
can you hear all of you?
No. Okay.
So how are the people in the last section able to hear?
Yeah, it's now.
Sorry, it's back. So, the last point Nat touched, so what I have seen sitting on the other side is a kind of sometimes a herd mentality and a feeling that I have missed out on this opportunity. So when, 3 companies are taken and there's a 4th company with reasonable management, that 4th company might do much better than the first 2 because he's the last one left and everyone's piling their money into that. So that's sometimes, so therefore we are coming back to there is, there are a lot of moving pieces out there and you cannot work the valuation of an Excel worksheet. There is also, generally what I've seen is how important are you to the company making the investment. So we are looking at, investment companies like Helion, Axel and the likes. But there are a lot of other strategic buyers out there. The likes of Oracle, you would have heard of the deals they've done. The likes of Facebook and the deals they've done. They go out and acquire because of how strategic the technology is to their current growth, current competition and future growth. So those are, factors that weigh into a valuation.
In other words, everything is, to a certain extent, is an art and also influenced by the herd mentality. Right?
Absolutely.
Right.
Nandakumar,
Yeah, please.
from what was just now told, I mean, what Nat told, it's more of an art.
Yeah.
And Chandy told, and both of you put together told, it's a competitive landscape,
Right.
which is pushing the valuation up.
Yeah.
So does these two statements answer what's happening in the e-commerce sector now in terms of the kinds of money which is going in, which, as both of you rightly mentioned, there is no, if you put a DCF or you put a earnings multiple or you put turnover multiple, all the valuation what you rightly told is an art. So does this answer that this is basically the competition which is pushing up the valuation?
Absolutely, absolutely, no doubt.
So, and also we look at, I get through Flipkart very cheap, lower prices product. Always wonder how these guys are going to make money.
So
Whereas
all
there are a
that-
lot of investors pumping in more money on this.
Right.
Sir, all that what consumers are getting from Flipkart, Snapdeal, Amazon are all investor money.
Right.
That's fantastic. We love it.
That is true, absolutely. I mean, I can share one of my personal experience in early stage, as early as 1999. That's when we went for our early funding. I mean, one of the investor, I mean, I couldn't believe, could give us 36 times of our revenue. It was a cash deal on the table. I could have sold the company at that point of time. I'm not talking about the values, but the point is, at that time, companies were valued at 1,000 times. This was .com days, right? So there is, if you look at those history, if you look back and saying that on what basis they are valued, there is absolutely no science behind it. Let us,
I think one point, Nats, is in addition to the sector being hot, the investors also are sitting back and saying there is a very, very large market out there. So e-com is reaching into areas that people have not. There are 1 billion people out there. And some of these big companies are targeting 5 billion turnover. So it's the market that they are viewing. And they have a sense that it will turn around at some point. So it's only going to get worse for shoppers like us. But that is behind the madness that you see. So there is some method to this madness.
Guys, I will give you an example of Make My Trip. Okay, 6 years back, 7 years back, Make My Trip used to offer a lot of discounts for travel tickets. I think all of you would remember that, right?
That is your money, is it?
No, so yeah, obviously it is our money. So so the point was, so I used to ask the CFO of Make My Trip, saying that, boss, what is this madness? So he used to say, like Chandy was saying, we think that people will come and we are thinking of a loyalty factor. So I told him, as a consumer, I will never be loyal to you. Okay? Today you are giving me 500 rupees discount, I'll be with you. Tomorrow somebody gives me 700 rupees, I will go to him. But if you really look at Make My Trip, the difference between the number 1 person and the number 2 person was 5 times, 5 guna. Okay, it is a non-trivial competition. Okay, and the number 2 guy could never catch up to Make My Trip. Okay, so that is number 1. Number 2, what they have done is they have immediately moved about 5 years back. After 1 year of this discount mela, they moved to hotel packages. Okay, hotel packages they moved. So what most of you will remember, if you want to book a Lee Meridian hotel, if you ask Lee Meridian website, it will say 6,000 rupees. Whereas if you go to Make My Trip, it will be available at 5,000 rupees. Okay, so what they do, they used to do a bulk booking and then they used to sell. So hotel packages they started. Then what happened? Consumers are very, very sharp guys. Okay, all of us, right? So this guy calls up Make My Trip. Okay, he knows that Lee Meridian is giving me 5,000 rupees at Make My Trip. He'll call Lee Meridian Hotel. So this guy will say that I am 6,000 rupees. He'll say, what are you saying? I can book in Make My Trip at 5,000 rupees. So this guy will say, I am not talking Lee Meridian, I have to get out here. Okay, I am talking small time hotels. They say, we can give you at 4,500 rupees, sir. So this guy will go to, this is a practical example, this happened in Ooty. So we go to Ooty and buy a hotel at 4,500 rupees, same hotel which is sold in their website at 6,000. Make My Trip is selling at 5,000. This guy got cash across the table at 4,500. Now, what did Make My Trip do? They have gone to the next segment, which is a holiday packages. Okay, now all these number 2, number 3 players have started giving the discounts. That does not matter, because if you are going on a holiday, you would like to book the air ticket, hotel and the package together. So Make My Trip stood an advantage. That is the constant discovery of the market and the revenue model the entrepreneurs have to focus. No. I think that is what I think Chandy was saying, that it will evolve over a period of time. How many of us know that Flipkart was selling first 3 years only books? Now they have moved to various categories. Now the only challenge I think in e-commerce today is the difference between the number 1 and number 2 is not too big.
Yeah.
So that is the only challenge which is still in my head a question.
Now then can I summarize this as essentially what you are looking at people creating an opportunity to attract customers. Once the customer loyalty is got, you make sure you deepen the relationship. Deepen the relationship. So that way there is only room for one or two.
Absolutely.
So that is the valuation
Absolutely.
thing which is driving this.
Absolutely.
Do
Absolutely.
you agree with that?
Absolutely. And in e-com, just to answer that question again, it's a gunfight out there, and they are expecting and they are wanting to be only two remaining. So you'll see a lot of sales continuing. So till the, that's the objective.
Yes.
Okay.
I just want to give you one more example. I don't know how many of you read Ola Cabs. So Ola Cabs has tied up with autos in Bangalore. They have tied up with 500 autos. And what they do is that they will pay, it is a public news, it's not a secret which I am leaking or something. So 5,000 rupees per month they will pay to the auto drivers. Okay? And it will all be put as Ola Autos. So I was talking to that company and asked them that, yeah, you are a taxi company, why are you doing autos? And your taxis are cheaper than autos. So why are you doing this? He said, boss, what we want to do is that we want you to take the auto, experience the auto, and understand that taxi is better than auto, and move to our taxi.
Right. Brilliant.
Hello, sir.
Thank you. So let me,
Excuse me?
yeah.
Sir, one
Where is
question. Sir, ours is a 20 years old software development company. Now we are going into e-commerce with the name kabuliwala.com. We have already started. Can we approach you for a startup funding?
Sir, I cannot talk that in this group. Okay, so you
Naturally, you want to talk to him one-on-one. He's available. Please take it up. Now, let me move on to the next subject. You talked about team. So what did you look in a team? This is another interesting question that has come up.
I think 3-4 things we look at. Number one is strategic thinking. Okay, how is your thinking in terms of growing the company? How you want to culture that company? Okay, so do you have a strong performance culture? That includes that if there are 3 co-founders and one of the co-founder is not performing, can you let that co-founder go? So that is the moment I ask this question, lot of people will not be able to answer. So that itself will speak. That is one. Second is how conscious you are in terms of the cost management. Okay. So it is not that you have to penny pinch everywhere. You have to penny pinch where it is required, but you have to spend where it is required. So that is another thing we look at. Third thing we look at is delegation of authority. For example, tomorrow, I'll tell you the typical Indian entrepreneur problem is they always want to be the CEOs. How many of you always want to be the CEO of your companies?
Everybody want to?
I can't believe that no hands is raising. Tomorrow we
there
are
is one.
appointing CEO for all your companies. Is it okay?
No, you're all. They only want to be entrepreneurs, not the CEOs, is it?
So 99%, I can tell you 99% of the entrepreneurs in India want to be the CEOs. They cannot distinguish between the ownership and the management, which is completely opposite to US. Whereas in US, the founder is okay to report to the CEO. He will be a VP engineering, he will be VP technology, he will report to the CEO. Whereas in India, it will never happen. You can never hire a CEO in an entrepreneurship company. You can never, I can tell you that. We had very, very bad experiences. We can never hire a CEO, he will never be successful. You will all talk very well, but so that is another important thing we look for in a team.
That's an interesting point. Chanda, you want to?
I think the other, and just looking at it from the other side, what we have seen is, investors like to see companies, being generous with their key employees. And we have seen most investors reserve about between 10 and 20% of the company as stock options for their employees. So that's another factor, and that's a mindset that the investors would check with the promoters, that we will all dilute, but let us make it participate.
Right. Interesting. Now, they're also talking about what is any other number of team members. I don't think that does matter at all, right?
That doesn't matter, but at least you should have some.
Sorry.
That doesn't matter, but at least you should have some 3-4 people together. If you are a single person, I think there is a risk is too high. For example, we got 3 people. Uh, 3 people came to our office with an idea, and then we asked a question. Only one person was talking, and we asked a question, what about your team? So this guy gave a big laugh and told, team, these 2 are my employees, he said. Then we just closed the book. We said, okay, fine, thank you. So that is about the team. And the
Belongingness, what you're looking for. Am I right?
That's
John, do you want to
Yeah.
say
No,
anything?
no.
Okay. And this is a very specific question. How much do you, how do you decide what percentage you should ask for, and how much you should divest?
So typically in an early stage company, we look for 25 to 30%. And why we look for 25 to 30% is because we think that over a period, over the life of the company, if big investors come, we may have to dilute some time. So at least at the time of exit, we own about 20-25%. And if we don't own that much in an early stage company, we will not be able to make money, because many early stage companies also will die. So we are conscious about it. That is one of the reason. But in a late stage company, we are okay to look at 15-20%.
I want to now get to some specifics on initial what we thought. Can you, we all talked about funding, and can you talk about some pitfalls in early stage investment and all the mindset which you see?
So pitfalls, there are a lot of pitfalls. So number one, the team itself. So one of the important thing which we look at, which I think Chandy started with forensic, this is a background check. We want to know that how much the entire team know among themselves. And very specifically, we want to know, if you are 3 co-founders, we want to know how long all of you know yourself, among yourself. Because that is a very, very key point to us. We don't want a situation when the company starts making revenue and some success is at the light is at the end of the tunnel, and the founders have a fight. So that is in my view is the biggest pitfall. Second is, we really want to know who is the CEO. So there will be 4 co-founders, and if they are not able to identify who is the CEO, then we don't invest. We want a very clear leader. And once they say that he is the CEO, we want to understand his leadership and the decision-making ability. I think that is another big thing. I will give you an example. There are companies who, when the market is very huge, okay, customer adoption has not started, okay. So they have to change the line of business. I have example of the CEO unable to think and the company died. I have an example of CEO thought about it and the company has grown very, very big in a different way. So I think that is another big pitfall. One last point is the ability to acquire the employees. See, how will you position to the employees? What is your USP? What is a dream you will show to the employees? I think in the lunch table, I think NK said, which I will not forget, is one of the learning I had today, is when in an early stage, see, when you are able to, if you have to attract people, you have to be first convinced. So we can talk, we can see whether you are convinced or no by your talking.
Exactly.
Your body language. I can talk any damn, but you, all of you would have made an assessment about me, whether to what extent I am telling right or not right. To what extent I am convinced in what I talk. So I think that is very important.
No, I think pitfalls for investees, all of you, sometime hope to become investees. What you must be careful about is the kind of money you take, who you take money from. Don't dilute yourself out too early. Now you hear a lot of concepts of, family, friends, angels, VCs, round one. It should not be that you're left with very little skin in the game. So as next investor coming in, and also, try not to take money from too many people. I know, you're fighting a battle. There is need for funds. But as more sophisticated investors come in, they don't like to sit on the table and discuss shareholders agreements with 15 people. They would like 2-3 people. So as you take money, be understanding of where your next, your next level funding is coming from. And what understanding you have with your investors? Will you give them an exit? Will they exit on their own? So those kinds of things you all should be careful about.
This is a very interesting question. What values you look for a company founded by couples? I hope the question is correct, whoever has written it.
Who raised this question? Can I know?
Good.
Madam, I am very sorry to disappoint you again. I personally do not believe the family members being part of the founders. For one reason, I think I don't know whether in the last TiCon I said this or in any of the Thai Kochi meet I said this. I think one of the Thai Kochi meet I said this. And people came with a ton of bricks, but I just mean what I say. We believe that with the due respect to all our family systems in India, there will be a lot of influence, okay, between the family members outside the office on the office matters. So which an investor will not like, especially a foreign investor. So it is not that we have not invested in companies. I think a couple of companies we have invested. One company was a failure. One company is a work in progress. I won't call it a success. Work in progress. So I think it is not a very clean green flag to us.
So could it mean that the other party can be a technology advisor or something like that without being in the books, or will that comfort the investors?
No. Sir, you see, I don't believe anything in grey, either black or white. Because this backside advisory board, there is no advisory board here.
But is that not correct, Nuts? Because without assessing the value of both of them, completely basing by family and then rejecting.
So you can.
No, probably that again it goes back by the philosophies of each one, and that is definitely talking about his personal approach. And that's about it. Don't take this as an industry norm.
Okay.
Definitely, please don't take
No,
it.
there are funds who don't mind, I think. And there are various reasons people have had. And it's probably, the investors are also guided by 3 or 4 people who run the fund. They may have had prior experiences, bad experiences, which deter them. But there are many other funds out there who don't have qualms about investing.
Let us face it, even family itself is an entrepreneurship itself, right? So you don't want two entrepreneurship going in conflict, or there can be different conflict of interest. So that's the point. That's the only point. I mean, from
and if you really want to advise, you can always advise without being part of the company.
You always have the undue advantage of doing that. Okay. And this is a very interesting question. What percentage of wrong decisions in your investment?
I think about 30%.
30%. And Chandi, you have some industry figure to talk about?
So it will be, I wouldn't want to say something that upsets people here, but I would think, 1 in 5 is a real success. And investors go out also to do 1 in 5 as a real success. And sometimes there is a lot of spraying happening there where they're not 100% sure, but they still back that company. So 1 in 5, I would say real success is 25%, Nats, is 20 to 25%.
Success is 25%.
Success is 25%.
Wow, okay.
Wrong decisions.
And there is an interesting question here. This is specifically, there's a very specific question, but I'm not going to get into details of it. This is somebody having an e-commerce concept and education, telling that revenue subscription, and I'm not able to, I'm skipping this because very specific, I'm not able to typically get.
On the wrong decisions, I just want to add only one point to all of you. Again, it's an Indian entrepreneurial ecosystem. We don't fail fast. Do you agree with me? I think a lot of the companies are living dead. Okay, they don't grow, but they don't shut also. They are just there. So that I think is detrimental to the investors because our time is very, very limited.
Right.
So
That's a very important point.
So we always say that if you want to fail, fail fast.
Right.
Okay, go to the next.
Okay, but this is a very interesting question. How does the entrepreneur value their company? What should they be looking? I mean, they should know what's the value of their company. That's a very interesting question.
So, so my submission to all the entrepreneurs is, once funding or once investment is taken, I think you should believe that all of us are in one place together. It is not that you versus me.
Yeah, once
And
you're
I
invested,
really-
once you're invested, we are together.
Once you are invested, all of us are in one page. All of us are partners of crime, partners to the crime, right? Whatever we say, good or bad. Because if you always have this feeling that if you are very paranoid that what the investor will think, he doesn't think about you. So don't, okay. So we have no time to think only about one person. We have so many things. So that with that perspective, I think you should value your companies very realistically. So you have to be aggressive. You have to expect that XYZ should happen, and then I have to make my company a billion-dollar company. You have to work on that basis, but you should not lose sight of the current reality. So if you are able to balance a vision of a billion-dollar company and the current reality, then I think you are game.
Right. And then there is a very interesting, very good point actually, that one. Specifically, will you invest in companies which with promoter has got more than one business?
No, I will not invest. Because we, like, this again, I don't know whose question. I hope that it's not your question. Okay, so this is again our philosophy is we believe that we bet behind the entrepreneur, we invest in early stage, so we want 100% time of the entrepreneur to the business in which we put money.
This is an answer I've heard across all the VC funds in Bangalore, that we are backing the investor. The idea is good, but we want the investor and we want 100% of his time. So more than one investment, if he's juggling two things, they will not invest. This is a hard line that they will not, or this is a binary decision, if you may, for them. It's yes or no.
Right. This is an interesting question. You talked about once you invest, you're part of the team, and what happens to the fund? The person involved leaves your organization, and the continuity. The partner, pretty much the same point which you're saying on the team side. How do they protect on their side?
So typically in all the investments, two people from the fund are involved. So even if one person leaves, the other person continuity is there. The chances of two people living together is a little remote. And even if they remove it, they go, I think it is an institution. Fund is an institution. Somebody will come. But I completely agree with you. For the entrepreneur, it is a psychological issue. Because I've been with this person for last 3 years, 4 years. New person come, new person has to understand. It is a tough one. But that is the reason we always put 2 persons in an investment, hoping that both the people will not leave together. And in Helion, in the last 8 years, nobody has left.
Specifically to that. Chandy, do you have any perspective on that?
No, I would. I think once the investment is made, they associate themselves with the person who's sitting on their board. But again, all the early stage I've seen, what the investee company is looking for is the experience and expertise of the team behind the person sitting on the board. So typically after the first year, you would get to know all the partners of the fund. You would draw on their experience. So the odd person leaving should not trouble you, or even if the person on your board leaves, you are very well connected with the ecosystem of the fund. And again, the fund, the attrition they have maintained very low, and the trick there is they pay really well. So no one can go anywhere else.
So what you're saying, be connected with the investor ecosystem.
The partners, the 4 or 5 people.
Investors ecosystem. Right, interesting point. And this is a very interesting question, okay? This is specifically to you. Out of the 7,000 versus 68, and do you know the ones which you rejected, any one of them really went successful?
Many have gone successful. So we have made a mistake of losing the deal.
I can give you an example, and you all can all relate to that. So Flipkart, before it got its first round, went to other investors also.
Including yours faithfully. We did not invest because the valuation was 40 million.
No, that was the second round, but even before that, people said, what is this? Will this sector take up? How will you courier? People will just steal it on the way. So there are investors who've given up that investment. So there is, of the 7,000 Nats would have seen, 5,000 would have got money and done reasonably, if not very well. Right? Nat?
Right. Brilliant point. Okay, then I need something specifically to Kerala. What is your outlook on Kerala as entrepreneur ecosystem?
So I think the entrepreneurship mindset is there. And we are seeing a lot of entrepreneurs in Bangalore who are really of, their origins lie in Kerala. And they have felt the need to move because of this ecosystem that we talk of. So really there is no dearth of entrepreneurship. This is an entrepreneurial city, or a state. It's only that there may not be the ecosystem today. But there are moves afoot to create that. It's just that.
Do you have a perspective?
So I think there is, it's not there is, there was some kind of stigma in Kerala, right? Because of they believe that labor issue will be here. Okay, I think the culture, the language, the food will not be able to mingle. I think that is all gone now. Okay, I could see today so many of people from Kerala are doing lot of technology companies. We have an investment in Leela Infotech,
Yeah, that's
Info Park,
Info Park.
called Rapid Value. And we have investment by a Calicut guy called, this is very interesting, it's called Idli Dosa Batter, ID Batter. Okay, and his revenue today is 72 crores a year. 6
Just
crore per
making the
month.
dough
Just making the batter. And 95% of the Bangalore market is captured by him. And he has sales in Dubai. He has sales in Chennai, he has sales in Hyderabad and Bombay. Right now it is in a very small one, Bangalore is the biggest one. We have another company by name Oopler, which is started by again a Malayali guy, he's from Cochin. A guy called Arjun Zakaria. So what they do, it's very interesting, it's a mobile, a lot of mobile stuff is coming from Kerala. So, so we think that surely I think Kerala is really moving ahead and forward. The only submission is I think all of you also should just keep connecting to the world a lot more. Come out, meet more people, get connected to what you are doing. You guys are doing great job. So then I think automatically interest will come.
Yeah,
It is not a favor to you, it is a favor to ourselves if we come and meet you.
Absolutely. I mean, I can share at least my perspective on this. I mean, I started at least 90s when the perspective was completely negative. And we even had situation where VCs rejected the proposal because I refused to move out of this place. They wanted this as to either Bangalore or to Silicon Valley. But we thought it is important for us to stay on. But it changes the perspective. I mean, if everyone does that, it is going to be a phenomenal transformation. And a state like Kerala, it really does require that kind of initiative. And let me, I mean, I'm very connected to the ecosystem. What is happening right now in Kerala is fascinating. Not only in Kerala, it is all over India. The entrepreneurship, I mean, I don't think today parents look concerned if their kids goes and tells them that, saying that, I'm looking at entrepreneurship. But I mean, I can personally myself, I can talk about my challenge, but it was challenging on those days. But those days are gone. It's definitely looking very positive, and the support from the government, support from the ecosystem. Now professionals are moving out, students are moving out. There are a lot of success stories, and it's a fantastic time to be in. And this is the right time. And the world is also looking at India. And I think with that, I think we have fairly come to a kind of conclusion. I got a few more questions. There are some specifics, but there is one thing which probably I can just add on. It's a very specific case. There's a 4 partner sitting with the person, and he want to not doing any value addition. How do he get rid of them, or will that investor come and buy them out? It's a very specific point, but if you want to answer.
So I don't think that I'll be able to answer the specific question, but I think you should really buy them out.
Right.
Because if they are not
adding value,
it is better to buy them out and then go to the investor. Because the moment you go with this, that itself will
it will
create
bring
lot
down
of
the
issues.
and it will
Not
bring
that
down the
bring
value.
down the value. Second is no investor will touch, because when there is a litigative issue, so it is too much waste of time for the investor unless you are extremely pricey deal. So my request is, I think you have to bite the bullet and then take
Buy
this.
them out. That's a very, very, very good suggestion. I think it's time for us to. Any question? Last
No
one
other
question we can
question.
ask.
No other question. But I think on behalf of all of them here, it's just a wonderful MC session. Lot of questions answered, and thank you so much, actually.
All right, thank you. Really appreciate that. I mean, you guys did a wonderful job and asking the right question. It made my job very simple, to be very frank. And I had only few questions. I only had very few questions, but it's a further, it's still coming up. I don't know whether we do you want to take one more last? Is it okay, Rajesh? All right. What was this? Like, whoever it is, this is Mr. Thomas, who has written this right now. Can you just ask it? KV Thomas? All right. Where is it?
Yeah. Sir, please come in the front.
Oh, let me, it's right. Can you give us microphone there? Oh, let me take it up. The food poisoning. This is a long question. Weekend payment of.
Yes, sir.
Sir, I want to start a new business, which is mentioned in my paper.
What is that?
I want to start a new business, which is mentioned in my.
In this paper.
Ah.
So, what is this business all about? The hotel food cannot be done.
Sir, it is an individual
question.
question.
You can ask the question subsequently. Let me just take 5 minutes, 2 minutes to summarize the points. First of all, we learned that the investors look for people and the market size, ethical values of the investors, and then people, the idea. Sorry, manufacturing companies have got challenges, less people, less investors. Valuation is an art. Team is important, strategic thinking, culture, cost management, delegation. These are all the characteristics. Typically, early stage, you can look for about 25 to 30% kind of dilution. How much you know about team is very important, is how much you know between yourself and are you a cohesive team or not. And typically 30% of the investment go wrong. Value your company is reasonably because you are partners afterwards. And there are a lot of points which you covered, and Kerala is always looking good. I just wanted to make it very quick. And I think with that, we conclude. Thank you very much for your participation. Thank you. I hope it was useful. Thank you very much.
Thank you so much. With this, we wind up with the segment.